Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Tuesday. What's up, everybody? Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are down a little bit this morning. The S&P is pulling back. The NASDAQ pulling back as well. So what is that going to do for the rest of the day? I know yesterday we talked a lot about patience. Meanwhile, crude oil is up a little bit, but it's in a strange turn of events. Gold is also down while the NASDAQ and S&P are falling. For those of you new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts every time that we post a new daily market commentary. We look at the same 10 to 12 futures markets every day from an educational perspective for both breakouts and reversals. Let's dive right in. So the ES this morning, we are down about 5 points. Now, the 5 points that we're down this morning, we are seeing on an hourly chart lower swing highs, lower swing lows. And yesterday, one of the things, the word of the day yesterday was patience. Yesterday was all about staying patient and not forcing a trade, and that's what I had spoken about in the DMC. Now, I feel like, as you know, we are still kind of in that same ilk, is that it's a good idea to just preach patience, although I think on a 15-minute chart, you may have an opportunity for a reversal off of this level right here, which is actually where we're getting to right now. So from this level right here, I think you could get price rolling over and getting a bit lower. So I'll try to get this video out fairly quickly because this could make a good candle-to-candle short opportunity from here. But that's about all. Other than that, I would wait for some of those further levels that we've already identified as a little bit further out on the supply-demand curve. Looking at the NASDAQ, same picture. You've got this rally up over the last few hours coming back into the reversal from the 2 a.m. area. So you could get a little bit of a rollover from here. You could also see price trade a bit higher, but I don't like any of these levels based on the time of day that they were formed. So if I don't get a rollover at this particular juncture, I might want to take a look at this area up here. That would be kind of your next potential, would be this area somewhere up in here. Crude oil. So yesterday in crude, we talked about a potential breakout above this zone. Price came into this zone, and we popped above it, and then we gave you a little bit of basing, and then you got a little bit of a breakout run out of that zone, and it popped ahead. But looking at this on a 4-hour, we've got a little bit of supply up here, which is where it kind of it's kind of stalled out just a little bit. Now, not a bad little opportunity for a breakout. Let me know if you were able to catch that breakout for a few points. At this point, if you did take the breakout, I'd move your stop up underneath some of this area here, just to eliminate any more of the exposure, any more of the risk. And I think that we've got a better chance for price to continue to rally a bit higher. So look for this to be a little bit more bullish for the day, possibly even another opportunity on a breakout if we get some more basing in here. Gold. Gold, we broke down through this level. We needed a little bit stronger basing right in here, but then we rallied back up and gave us another opportunity to get short. So big move down in gold. That trade actually was pretty effective if you were able to take that one for a few points. May or may not have gotten in with the basing occurring up here. It definitely widened your exposure, right? Because typically I'd like to see the basing somewhere in this range down here before entering. But we did get on a smaller time scale. If you look on a 15-minute, we came back up into some of these areas where you may have gotten a bit of a reversal. Now, what we're seeing today, looking at price rallying back up, we've rallied back up into this kind of region here. If you wanted to give this one another shot on a 15-minute breakdown, you could get short below this area right in here. Bonds and currency markets. We don't have a whole lot to report as far as a change. We had the 10-year note is still coming down into our level of demand. Not quite gotten there as of yet. So it needs one more thrust down before we would be able to get in on the 10-year note level. Looking at that level, I actually really like this one that was formed yesterday. You notice we keep creating supply levels that are not getting touched, right? So anytime you create supply levels that keep not getting touched, I mean, that obviously tells you your trend direction, and you're better off entering on some sort of a candle to candle or on some sort of a breakdown, right? That's why this breakdown here was so effective. We had another one right here that was effective, and so no breakdown setup as of yet, but we do have that supply level up above. In the Aussie, we are, we're putting in what could be a head and shoulders pattern, frankly, on the hourly chart. It's not quite fully formed as of yet, but keep an eye on this for a potential head and shoulders pattern with price trading down into this region. Other than that, look for the reversals both above and below current price. The euro, that's the same picture we looked at yesterday. No real change in the euro from our supply level above and our demand level down below, as we've got this support line right in here. And then the Canadian dollar, we actually did wind up breaking out to the upside on the Canadian dollar, and then it just kind of chopped around, right? 1, 2, 3, 4, 5. After 6 candles, price had gone nowhere, and then that's why we have sold off a little bit more. And so I think that in this Canadian dollar, you can look for a potential reversal on a candle-to-candle style as we're coming back up into a decent reversal area, and it gives you a candle-to-candle entry. Great British Pound and Japanese Yen, which would be my final 2 markets of the day. In the pound, we're still in between our areas of supply and demand. No real change from yesterday. So I think that kind of stays the same and without really anything added to it. And then the Japanese yen was an excellent level yesterday, as we did rally back up into our supply and got a really strong sell-off from that supply zone. So now that we use this level up, I'm going to have to remove this one. Let me know in the comment section down below if you're able to catch that Japanese yen, as it was a perfect entry and the price moved down. So from yesterday, the crude oil level, the gold level, and the Japanese yen, all of them worked out pretty well. Everything else was basically patience, right? It's a lot of patience and waiting for price to come to you. So keep an eye on some of these candle-to-candle opportunities today in these markets. I continue to preach patience. Usually I see this, kind of sideways price action typically precedes a fairly decent pullback. At least that's what we've seen happen in the markets in the last few months. When you see this relatively boring price action, it has preceded a decent pullback, right? Relatively boring price action, strong pullback. Relatively boring price action, strong pullback. So just be aware that is a potential on any day for price to give us a pullback, but I think that this demand level is still a pretty good zone, so keep an eye on that one. But candle to candle, I think, is very much in play as of now. Hope you guys have a great day. If you need anything, please send us an email, support@tradersarmy.com.